Mark Twain once wrote, "History doesn't repeat itself, but it often rhymes." In this video, I will lay out my thesis that we're about to enter a period of stock market action that will rival that of the roaring 1920s and also of the dot-com boom of the 1990s. I've arrived at this perspective by examining both fundamental and technical factors. Let's take a closer look at why I believe we may be entering the roaring 2020s. The 1920s were a time of excess and prosperity for the United States. After the horrors of World War I, the ingenuity that was used to win the war was turned to produce many modern appliances that we often take for granted. The 1920s saw the advent of many important products such as the radio, silent movies, vacuum cleaners, washing machines, and refrigerators. It was also a time when many Americans first had the opportunity to purchase their very own automobiles. The demand for these new products led to strong growth for leading companies such as RCA, as well as for the market on the whole. The 1990s saw the internet totally transform the world. For those who were born in the 1980s or earlier, we can remember what life was like prior to the internet. From this one singular invention, virtually everything changed, from how we purchase items, to how we listen to music, to even how people date. The introduction of the internet into the economy led to an absolute boom as the Nasdaq Composite climbed higher into the year 2000. In our current times, we are also on the verge of a new era. The coming decades will likely be dominated by crypto and AI. Just like the introduction of the internet, these two innovations will usher in a period of increased productivity and thus sales and earnings growth for tech-related companies. Crypto has developed a somewhat negative reputation, but blockchain technology has the potential to completely transform the way transactions are recorded. This will drastically affect voting, financial transactions, healthcare records, and the entire banking and financial space. This is a complicated topic, but for a quick introduction, please see my video on Ethereum. Artificial intelligence is a term that has taken on a very dark and ominous tone over the past few years. While many have visions of a dystopian world similar to that of Terminator 2, the truth is there is also the possibility that AI will enhance the human experience. It is true that the internet eliminated many jobs, but it did also create countless new industries. For instance, there are very few door-to-door encyclopedia salesmen nowadays. But the flip side is, now it is easier than ever to start your very own online business. Likewise, less people watch cable television, but more and more people can watch or even start their very own YouTube channel. AI will bring with it massive changes, and those innovations will lead to increased productivity, which will lead to stronger earnings. This is something Wall Street always likes to see. The 2022 bear market saw the Fed repeatedly raise interest rates 11 times to break the back of inflation. In the mid-1990s, Alan Greenspan raised rates 7 times, bringing rates up to 6%. When we look at the chart, we can see how in 1995, when rates stopped rising, the market roared higher. I believe we will see similar action in our current times as the Fed has signaled it no longer has the intention of raising rates and instead is likely to cut rates. For the past few months, I've been bringing up a comparison between the 1990 bear market and the 2022 bear market. The charts look strikingly similar. There are also some comparisons that can be made between our modern era and that of the first quarter of the 20th century. The panic of 1907 was a banking crisis that had some price action that was similar to the 2008 crash. In addition, the Spanish flu took place about 100 years prior to the COVID-19 pandemic. There was also a bear market in the early 1920s, which is comparable to both the 1990 bear market and the 2022 bear market. While all of this is interesting, no one knows for sure what the future holds. The best we can do is try to anticipate trends, ride them when we are right, and quickly exit for a small loss when proven wrong. Time will tell if we really do see a roaring 2020s, but one thing is for certain, the 2020s will be anything but boring.